Hello? Can you hear me now? Okay. Sorry, guys. The headset was on mute. Um, okay, so last night's session was real interesting after the ECB in the U.S. We tested the downside. We reversed back up, to trade up nicely. It's been 3 hours moving out to the right. And from there, obviously, we finally kind of took out the earlier session highs. Then we really started to rally hard into the close. But it was interesting, really, I guess, that it took so long to get going. You know, obviously the ECB announcement came out. It was, more aggressive than I think everybody expected, which was obviously, stimulative to global equity markets and kind of threw out the risk-on sentiment. But it was quite amazing that it actually took so long to get going. So, it's going to be it's going to be real interesting to see, how long this is going to run for, how it's going to play out. There's a lot of different opinions about it relative to, I think, the U.S. and what that stimulus program did. If we look at Asia overnight, everything did rally pretty nicely as well. Really led by Australia. Obviously, the mining heavy index traded really well. One of the things that I found really interesting is that how poorly that physical commodities traded yesterday. I mean, this morning we've got oil that's up a little bit on the back of the Saudi king passing away overnight. But, the rest of the commodity complex actually traded really poorly. And I actually think that the mining stocks there didn't trade that great. They were up solidly, but I don't think they were up as much as they were in London yesterday. So, we're obviously following on the back of European markets yesterday and U.S. markets today. For me, there are a lot of questions surrounding this market, surrounding the viability of this, the sustainability of this whole thing, and just some of the market action yesterday seemed a little bit odd. And maybe it's just the environment that we're in. We've been in a real, archaic environment in terms of dramatic asset price movements between currencies and commodities and everything in the past several months. Moving on to the charts of interest, obviously you got to show the ECB balance sheet here. We had big balance sheet expansion there back in 2012, and since then the balance sheet's really been contracting. We contracted from about 3 trillion back down to 2 trillion. And really what this is setting out to do is just to take us back up to that same sort of level, that 3 trillion number, maybe slightly higher. And they did leave this open-ended. They obviously left the policy open-ended if they weren't up closer to their 2% inflation target at such a time that the market would, that they would keep going with this with the stimulus. Right. This morning we had Anglo American Platinum, which came out with headline earnings per share at 293. Expectation, I think, is a little bit higher than that, saying that headline earnings per share declined due to 5-month industrial action. We've also got Honeywell, McDonald's, and General Electric out in the States later. Over the weekend, we've got a handful of stocks going to ex-div. We've got NTCs, PFGs, and TONs. So, keeping an eye on those today. Could be outperforming a little bit. If we look at market data, we've got the Japanese PMI numbers, or we had them overnight, as well as the China PMI numbers overnight. Both numbers looking a little bit better than expected. We've got German PMI out at 10:30. We've got European PMI at 11. Retail sales in the UK at 11:30, and then really nothing until we get into the States later. We're having PMI there as well, and home sales and leading index numbers. Right, let's get into the maps. Okay, so some of the conflicting factors I want to talk about last night, which is really interesting to me. U.S. Treasury yields rose on the session. I'm real surprised that happened. I mean, maybe it's just a little bit of flows moving out of European yields, so I don't know why they weren't expecting that in Europe yesterday, but moving out of some of the lower yielding stuff into U.S. yields. But you know, the spread between German 10 years and U.S. Treasuries rose by like 9 basis points yesterday. It's quite a reasonable move, and I think that from that point of view, from just the U.S. Treasury yields rising yesterday, to me it's a little bit of a cautionary flag in terms of everybody just getting risk on, right? Then we had the Japanese yen. I mean, we started the day, we were hovering right around that 118 level. I think we traded about 117.90 and change the whole day. Going into that announcement, we backed off when we sold, or we actually strengthened the yen from there when we traded down a little bit. But I mean, you know, overnight we ended up pushing 30 points in the S&P. You know, everything went. You know, all the equity side really pushed really hard, and we moved to 118.40 on the Japanese yen dollar. So I'm also looking at that, thinking to myself, you know, the market hasn't really gone real risk on that indicator either. Then you look at things like physical commodities, which got no bump up. In fact, physical commodities sold off yesterday. The gold price went a little bit, but we had copper, which traded lower. Again, this morning it's lower. We had oil, which traded significantly lower. I mean, oil was up 3% at one point yesterday. It finished down about 3.5%. Obviously, we've got the bump up on the death of the Saudi king this morning, but that's a bit of an external factor. Anyway, my point is that there are a couple. There are a couple outliers out there that just kind of make you wonder how much the market really believes in this, and maybe that simply is just going to give us a lag in the run to the upside in the market. Maybe that because there are some doubters out there that this thing really does have a chance and everybody's not on board already, or is it the fact that that no one believes it's actually going to really work, and this bump up might be temporary. One other thing that really gives me a little bit cause for concern as well is this chart here. That's the German DAX, which in 11 trading days has run 12.5%. So, if someone wants to tell me that the market, didn't have the stimulus priced in, I don't believe it for 1 second. 12.5% rally in the biggest index in Europe. I mean, that's incredible in 11 trading days. So, that's something that, it's not seen often. Obviously, we're breaking out of a long-term setup here where I do think inverse head and shoulder, which I think has a higher target. My point is it's really, really overextended in the short term already. So just keep an eye on those kind of things. Anything can happen. We can get really volatile over the next couple sessions, but definitely already had a big run out of Europe to this point. All right, first thing what we're going to get into this morning is BHP Billiton. Billy's popped up nicely yesterday going into the announcement and really got heavy after the announcement. I know we did kind of close down at the more toward the lows of the session, but you can see here it came up and tested this call it 257 level, and I think this is a big level. If it can get above 257, then this thing's got room to run, in my opinion. If it fails off of this level, then I think we can have probably a nice little correction here. Interesting that the way that these things traded in London or in Australia overnight, they didn't have quite the run that you may have expected. So I'm not actually even sure where to kind of call these things at the open. Anglo's also had a similar type move, and they looked like they were breaking out. I mean, we were trading at 203 and change going into that announcement, and we bombed out down to 98.50. I think at one point we were trading lower than that, even close lower than that equivalent in London. But there's a gap fill here to the 199 level that kind of always had to happen anyway. It looked like we were breaking out through north of that gap, only to really fail it into the close. So I want to really see how this thing trades around that 199, maybe call it 200, just for a round number being so close, and see if it fails there. I mean, if it does start to fail there, then this will really look like a classic bear flag that would be dropping out the bottom side here. So if we get below, call it 190, if we can get south of 195, then I would say that Anglos can start to resume a downtrend again. Steinhoff traded really well yesterday. We finally broke out and closed above the 60 level. I think we can back up even further here and give that level some, there we go. So we see how we really rallied so hard into this level, put in a lot of consolidation. It's kind of looking like a continuation pattern or a cup and handle or whatever the hell you want to call this. But bottom line is above 60. We haven't had a close above 60 in this whole run. So yesterday's close, I think, is telling. I think that this thing has a nice upside target from here. I mean, it's a very big upside target. In the short term, I think it's got a quick $4 or $5 in it, but in the long term, probably more than that, technically. All right, next one we'll look at is Aspen. We did show this a couple sessions ago and showed this kind of narrowing, wedge or triangle pattern that we've got here, and we popped out of it yesterday. Actually, kind of rallied hard and closed back down toward where it opened earlier in the session. But I think that this thing has broken out here, and pretty much every time it's broken out in the past 2 years, it's just had a hard run after that. So watch it closely. It might also have some more legs to it. The last one I'll show is actually Standard Bank. So Standard Bank, you can see here kind of testing this level up around 146, where we've topped out twice in terms of the close over the past few weeks. If we can get through this level on a closing basis, I think we're going to see new all-time highs in Standard Bank. Couple that with what's going on in the markets right now, really hard rally in global equity markets. We're obviously going to open up this morning about 400 points. I think that obviously this thing can potentially make a breakout this morning. If it can close up there, keep going. That's it for today, guys. Thanks a lot.